In today's video, we're going to talk about whether Canadian banks are safe, especially in light of the recent collapse of Silicon Valley Bank and Signature Bank, which were the second and third largest US bank collapses. It's a fair question to ask, and we'll explore the reasons why Canada's banking system has been able to avoid a crisis during times of economic turmoil in the past. To answer this question, I'm going to share some information from a white paper called "Why Didn't Canada Have a Banking Crisis in 2008 or in 1930 or in 1907" by Michael Bordeaux, Angela Reddish, and Hugh Rockoff. Hi, my name is Koukun and I'm a real estate investor and I run a real estate team here in the Niagara region. If you're interested in learning more about what we do, check out our free beginner's guide to investing in the Niagara region. First, during the 2008 financial crisis, many countries around the world experienced severe banking crises, resulting in economic turmoil, high unemployment, and a general sense of instability. However, Canada was an exception. Despite being closely integrated with the US economy, Canada was able to maintain the stability of its banking system, and the country was able to avoid a crisis. So why was Canada able to achieve this feat? One key difference between Canada and the US is that in Canada, the federal government has the power to charter and regulate banks, while in the US, state governments continue to charter banks, resulting in a fragmented banking system. This has allowed Canada to have a more centralized banking system with nationwide branch banking and a stronger focus on prudence and stability within its banking culture. Another crucial factor in Canada's banking stability is the country's strong regulation and supervision. The Bank of Canada has a mandate to maintain financial stability and works closely with other regulators to monitor and regulate the banking system. Canadian banks are subject to strict capital and liquidity requirements, ensuring that they have sufficient reserves to weather any potential financial storms. The Office of the Superintendent of Financial Institutions, also known as OFSI, oversees the operations of banks and other financial institutions, ensuring that they are operating in a safe and sound manner. Moreover, in Canada, all the major investment banks are owned by the large commercial banks, and close to 90% of the mortgages that are originated by Canadian banks are kept on their balance sheet without securitization. This increases the scrutiny on the borrower as the risk is held by the bank. In contrast, the US has a fragmented banking system, resulting in the growth of investment banks that were responsible for developing the strong securities market in the US, which allows banks to move assets off their balance sheets by selling loans as bonds. However, this also means that the risk is transferred to investors who may not fully understand the risks that they are taking. This is one of the factors that led to the 2008 Great Financial Crisis. Another key difference between the Canadian and the US financial systems is the lack of long-term fixed-rate mortgages. In Canada, the majority of mortgages are 5-year fixed-rate mortgages, whereas in the US, the most popular option is the 30-year fixed-rate mortgage. Here's something to keep in mind. When interest rates rise, the value of mortgages on the balance sheet of banks goes down, and the longer the duration, the bigger the impact that rising rates will have on its value. This is one of the key factors that caused Silicon Valley Bank to go bankrupt. So to answer the question, are Canadian banks safe? The answer is a resounding yes, and it's due to a combination of factors including centralized nationwide branch banking, a focus on prudence and stability within the banking culture, and strong regulation and supervision by the Bank of Canada and OFSI. And the proof of this is that the Canadian banking system survived the Great Depression, the period of high inflation in the 70s and 80s, as well as the 2008 financial crisis, mostly unscathed, even though those were very difficult times for the overall economy. How do you feel about the safety of the Canadian banks? Let me know in the comments below. And if you're interested in investing in the Niagara region, there's a link in the description below if you'd like to book a complimentary consultation with one of our investment coaches from my real estate team. If you like this video, give us a thumbs up. And if you haven't already, subscribe for more investing content. All the best.